Hello everyone. Today is July 1st, 2025, 11:28 a.m. Japan time. The Nikkei is currently at 40072 yen, which is down about 400 yen from yesterday's close. It had peaked around 40800 yen yesterday, so we are seeing an 800 yen drop from that level. The market seems to be struggling to stay above the 40000 line. It's starting to look a bit shaky. One key factor might be the Trump tariffs. The 19-day suspension that began in April is now ending, and Trump recently commented that negotiations are essentially over. He's been especially critical of Japan and seems firm on reinstating the full 25% tariff for Japanese cars. The tension may be waiting on Japanese equities now. In contrast, the U.S. market is holding up well. The S&P rose 0.5% yesterday to 6205. Meanwhile, Japan is also facing some domestic issues. Rumors about political shift, upcoming upper house elections on July 3rd, and even minor earthquake in the Tokara Islands, all of these could be adding to market unease. Japan's weather is another factor. June just ended, but the heat here feels like we are already in late July. I'm modeling this season and noticing that we are about a month ahead of usual summer pattern. This early seasonal shift could affect fresh food price. Summer vegetables like tomatoes and peppers are likely to rise, and processed food costs might follow. The volatility index was 24.59 yesterday, up slightly. That's interesting because equities remained strong, but volatility did not fall. PER is at 15.95, which is high, driven by strong EPS of 25.38 yen. However, interest rate remains high. Japan's 30-year yield is still at 2.9%. That rate selling might be capping valuations despite earnings strength. USD JPY fell back to the 144 range after nearing 146, while US yield are dropping. Japanese yield are stubbornly high, despite announcements of bond issuance cuts. So we are in a weird spot. The yen is stretching, but rate aren't falling, and the market remains capped. Again, the US looks stronger. US yield are down to 4.78%, and energy consumption is up, showing economic resilience. In Japan, through electricity demand is also high, political uncertainty is holding the market back. Looking ahead, upper house election could be key. The ruling LDP Jiminto lost big in the Tokyo Assembly elections, and if that trend continues, we might see political gridlock again, like in 2008, 2009. If that happens, there's a real possibility of a leadership change in Japan. That could shift Japan's stance from a stable phase with internal reform to both external and internal instability up down we've seen before, and one that market dislike. But there's one bright spot. Tokyo Land's value just came out and it's up 8% overall. So districts like Asakusa jumped nearly 30%. Areas with high inbound tourism are clearly booming. So real estate remains strong, even the equities wobble. Um, all in all, the market feels like it's entering a holding pattern. Let's keep a close eye on the political headlines and how the market digests the July 3rd election news. Follow my podcast on my contents rank bit option, and or I'll see you tomorrow. Thank you so much.